Welcome to the Market Alert for Thursday, the 11th of January 2018. So yesterday the pound was moving down, and then all of a sudden we see a good 80-point rise there, and wanting to know what was behind it, did a bit of research and eventually found this article here. Treasuries tumble, futures slide on report China to slow halt on Treasury purchases. Now, yesterday I'd mentioned in the Market Alert about the bond market and the yields, which we're going to look at in just a moment. And basically the news was that China was going to start offloading or not buy any more US Treasuries, which completely unfounded, according to a further article that was released overnight. So this is probably why you're seeing this return back to where it started off originally. And that's because one news item isn't going to change the trend of a market, and at the moment the pound is starting to move low, as we've spoken about over the last few days. Break below here and the average will see this market move lower, and where it could end up, along with all of the Brexit stuff at the moment, is down in the sorts of levels here. Should the market continue to move to the downside there. And news wise, what have we got today? Just seeing if there's anything there to move the market. Nothing moves the market now, of course, because it's just one direction and continues to move higher, but there's nothing there to really get excited about. Let's just go back to let's have a look at the Dow first, and then we'll have a look at the bond yields on the 10-year note. So in the pre-market session, you see that same thing. Again, sent a note out about this. So a 100-point drop in the Dow. Market finds support, and then we start to make our way back. Get the initial shakeout. The market's tested. Market buys back. Market moves higher. Get a bit of profit taken at this level here. Doesn't break the 20-bar average, and then we're back to the upside again to the 25,400, and then we get the obligatory profit taking in the evening. Market comes down, market's tested, and get the market then moving higher on the overnight. And in the daily chart, you can see that the buying is there. There was a bit of indecision yesterday, which you can see here. Let me just remove the cursor there. You can see this here, a lot of volume there. That's because the market sold off 100 points in the pre-market session due to the news, and then we're seeing the market move higher now. And we know which direction it's going to go, and it's going to continue to move higher. That's for sure. At this time, there's nothing to stop this market moving higher. Now, in the 10-year yield, this chart, this is what was behind the move yesterday. The 10-year yield trading back towards the 263 area, I think it is. We'll have a look at that in more detail in a moment. But you can see here, this chart goes all the way back to 1953. And from 89, they started to include the open, high, low, and close. And you can see the interest rates have been moving lower for the last 30 odd years, or heading in that, well, yeah, definitely more than 30 years if you look back to 1983. So let's have a look a bit closer at what's going on. In the weekly chart, the 262 area is where the market got to last year. Didn't really have the same effect upon the market, even though you got rising yields. And for some unknown reason, yesterday it was important. So you can see the market yield moving there. If I can just bring this over a bit, what's going to be interesting is the 2013 or 2014, December 2013, January 14 is the 3% area there. That's going to be the interesting one. If the yield gets to 3%, then there's going to be a major problem. But at the moment, as we're seeing on the overnight, I would expect this to continue to be sideways, I would have thought. Just a lot of news yesterday. I mean, there's certainly, the Fed are going to start offloading the balance sheet and everything else It isn't going to be pretty, and it is going to be a mess, but is it now is really the question. That's what I would like to throw out there, because I think it's a bit too soon personally. We've been at the 263 before, as I say, in the 3rd of 13, is that? Just trying to read that. Yeah, March 13, that is. So we've got the 3%, the 2.62 area there, and we're not near it yet. I mean, it could have a push up, and that will take care of it. And then you've got the 3% there. So yeah, the yields are rising, but then they rose quite markedly here. It didn't stop the stock market from coming down, did it? But like I say, that does come with a caveat this time, and that is that the Fed at this time was still printing. They're no longer printing, and they want to offload some of the 4 trillion. So as the yields go higher, that's going to make their job even more difficult. So there is trouble down the line, no doubts about that. But whether it's now is another thing. Interesting to see that one day when the market goes up to 2.55, there is a bit of an issue there. Right, let's have a look at the implied volatility down slightly as well, given that the market dropped 100 points in the pre-market session. So again, no concern being shown here either. Right, Bitcoin, before we conclude. So Bitcoin continues its sideways consolidation. Yesterday we looked at this figure. The market's traded down below it and currently just above it. It's got to close above this and move back to the upside. If not, you're going to see prices come down and retest this level here. We could do this as well. So also watch if the market breaks the previous one down to this level as well, and then again that same issue there. See if the market breaks below. If it does, then we're heading back to the recent low that we saw in December there, and that will be interesting if we do get to this level to see how bearish this market is. But at the moment it's range bound, and you'll expect that consolidation as the market made such a massive move in November and December. Right, that will do it for this one. If there's anything to report, I will let you know. Keep an eye on the 10-year yield during today and over the next few days. But other than that, as ever, thanks for watching. See you in the next one.